Hey everybody, today is June 13, 2023, and today we're gonna talk about the stock market, which is having this incredible breakout rally right now. CPI report came out today, and it was good. It was showing that the inflation data is going down as expected, down to 4% now. However, we have a Fed meeting tomorrow, and that's gonna be a very important meeting because are they going to continue raising raising rates, or are they going to start to pause, or perhaps even cut rates? And that's going to have an immediate effect on the market. So before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so basically today's big news is that the CPI data came out and it's shown that inflation has been going down as expected, right? With the Fed raising the federal funds rate to over 5% now, we expect a lot of downward pressure, right, on inflation. And now we are successfully have pushed it down from 4.9% in April to now 4% in May, right? Excuse me. So things are looking good. Fed funds rate is currently at over 5%, right? So the question is, with the Fed meeting tomorrow, are they going to increase interest rates again by perhaps 25 basis point as the market is expecting, or are they going to pause? It's sort of like 50-50 now. So, like some people think that they're going to raise it by 25 basis points. Some people think that they're going to pause. And I think there's a good chance they're going to pause, right? Because I think that their terminal rate target was, they've said multiple times, is going to be over 5%. And I've said that there's going to be perhaps 25 basis points rise this year. And they did a 25 basis point rise last time. And so I think that there's a good chance they might pause tomorrow, which will be great for the market, right? Yeah, so with inflation coming down closer to their 2% target, right? We're at 4% now, but their target is 2%. I can see them perhaps pausing now, right? If inflation was really hot, they went higher than expected, then I could see them doing more of a 25 basis point rise. But the fact that the market is going up, it seems to be pricing in perhaps a no interest rate hike, right? A pause. Now, as for like another possible scenario, they might cut rates. I don't think that's going to happen, right? I think the Fed wants to see inflation fall closer to 2%, right? It's on its way now, right? Since we peaked last summer, but we're still not at 2%. And so I think when it gets closer to like 3%, maybe, I think the Fed might consider cutting, but that's probably not going to happen until next year. So best case scenario, I think tomorrow is they're going to pause rates, and the market is probably going to rip a little higher. However, if we look at the market just in the short term, we talked multiple times about how the stock market, excuse me, has been in this channel, right, between 3,800 and 4,200 for about a year now, since last May, right? And usually when a market goes sideways, it's going to make a decision at one point or another whether to break above or below and continue up higher or lower, right? And so we've had a break out of the channel in the beginning of this month, and since then we talked about how the next local high was 4,300 over here, right? Which is also the kiss of death of the 200-day moving average, where we plunge after it got rejected. But now we basically have ripped up higher. So the question is, are we going to have a pullback, or are we going to continue up higher and perhaps challenge the next local high around 4,500, right? And then of course 4,600. And see on my Twitter page, and please follow me at EddieLux_ if you haven't already. I've basically had this continuous thread over the last several months, going all the way back to April, how we've been in this channel, right? 3,800, 4,200, and we're looking to breaking above, right? I said 4,200. So the more we test the resistance level, the more likely we are to break it, right? But when we had the debt ceiling thing, which we resolved, and now, this is my update last Thursday, right? It's broken out the year-long trading range. Next target is 4,300. We've since blown past that, right? We've gapped up today. So the question is, are we going to continue up higher, or could we possibly pull back, right? So obviously we had great CPI data today, which shows that inflation is cooler than expected. Or not expected, I guess they were expecting to go down, but it's as expected, it's been going down, which means that there's less pressure for the Fed to increase interest rates to try to bring the inflation down, right? If it was hotter than expected, they probably would raise it tomorrow, or at least the chances of them raising it is a lot higher tomorrow. So I think that market right now is pricing in a rate hike pause tomorrow. But of course, we have to wait until tomorrow to see what they actually do, and I'll definitely update you on Thursday with a chart on my Twitter page. So definitely follow me on Twitter, EddieLux_ again, and we'll make a chart to add on to this chart and see how the market reacts to tomorrow's rate hike decision, if there is a rate hike decision, right? So going back to SPY, the ETF that tracks the S&P 500. So we've broken out not only about that 4200 resistance range, but also above this Fibonacci range, right? And Fibonacci levels are usually pretty good levels of support for technical analysis, right? This level was acted as support, but then it was broken. Then it became resistance here, rejected, and now we're breaking out and trying to turn this into a support level again, right? So it is possible we might actually come back down and retest this Fibonacci support level, right? And how that would look on the year-long chart that we looked at. Same thing, right? We came up above, broke out, rate deviation above the resistance, rejected from the 200-day moving average to kiss of death, and then plunged back into the range and actually below, overshooting to the downside, right? Before basically returning into the range again. So it's possible we might come down and retest this level, but what I'm looking for is basically possible retest down here to the Fibonacci support level, right? And you can see there's a gap over here. And this gap can act as support. If we're able to hold this level, it could be a strong support level, meaning that if we're able to hold, it could be a sign that the market is ready to go up higher. If we are to come down and retest this level, right? Originally, I said that over here, I thought we were going to come down and retest these resistance level, but the debt ceiling was resolved a lot sooner than I thought. I thought they were going to keep dragging out a lot longer, but that was resolved a lot faster than I expected. And also, the inflation data was pretty good today. Cooler than it's been going down. So I'm not expecting us to come down and retest these moving averages anymore, unless we have like some catastrophic news that I haven't heard yet. But I do think the market is a bit overbought in the short term, right? And it's not just me saying this; it's the technical indicators are aligning with this as well, right? This is the RSI. We are in overbought territory right now, above 70. Right? Look at the weekly. The weekly for the S&P 500, right? 5 weekly green candles in a row, approaching the 70 mark, right? Not yet overbought in the weeklies, but definitely on the daily. So we might get at least a short-term pullback, right? The VIX has been hit pretty hard, and usually when the VIX comes down this hard, there's usually like a dead cat bounce, right? As they say, a mean reversion, right? So that wouldn't be surprising if we have a short volatility event, right? Especially with the Fed meeting, it tends to be binary events. But of course, with the inflation data today that we know, the chances are that the Fed is probably not going to pause tomorrow. But of course, we have to wait till see. So right now, the Nasdaq has been on a tear. This is Nasdaq 100 ETF QQQ. As you can see, it's basically just been on a tear since the beginning of the year, right? And it's definitely overbought on the daily chart. In fact, let me get rid of this. Of all the three indices, right? All the three main indices, the Nasdaq is actually the most overbought right now. And you can see even on the weekly chart, the weekly chart is overbought, right? Yeah, it's in the 74. So last time we were this overbought was August of last year, right? Basically here. And we saw that August of last year we hit this level and we just plunged, right? Now I'm not saying we're gonna have a big plunge down here, but I can see the Nasdaq coming down and retesting the, let's say, 100-week this gold line moving average, perhaps, or at least going sideways. Usually the market corrects two ways: through price, where it has a big steep decline, or through time, where it just goes sideways, chops around sideways before going higher. So I am personally waiting to see if there's opportunities in this market to buy. Right, if we do have a pullback like we saw in the S&P, we can come down to I can see at least 340 to test. But see, these moving averages are starting to get stretched. So I would be cautious about buying tech stocks right now, because I do think that the market is overbought in the short term. And again, if you look at the market sentiment, right, we're in extreme greed zone, right, which means that we're getting close. There's not much more room to the upside, right, in terms of sentiment. And usually when we get to this level, there's plenty of room to go down before we reset the oscillators, right? And things become more into neutral territory rather than overbought territory, right? So again, things are looking pretty good right now. So the market is not in immediate danger of having a big crash. There's no exogenous event like we had possible debt ceiling. That's been resolved. Inflation's looking good. The Fed will probably pause tomorrow. But for now, I do think that the market technically is still overbought, although the VIX isn't necessarily reflecting that. Yesterday the VIX was very high, even though the market went up. But yeah, so my strategy right now, and this is just my own strategy, it's not financial advice, do your own research, of course, and make your own decisions. But for me, I'm just waiting to see if the market is going to pause a little bit. But then again, we've been in, like I said, we've been in this range for a year now, and it's not unlike the market to have a nice, strong rally when it finally breaks out of a year-long range or longer, right? So it's possible I can go up higher, and I'm definitely open to being wrong again. But yeah, I'm just keeping my eyes out because I generally like to buy when there's more fear in the market. But yeah, but the most important thing is what the Fed's going to do tomorrow, because that's going to set the tone, right? If they decide to pause, that could be, that could set the precedence for the next couple of meetings, right? As long as inflation keeps going down, we can expect them to continue to pause or even continue or not continue to start cutting rates, But I don't think that's going to happen this year, probably next year as we get closer to 2%. I think the Fed wants to definitely get closer to 2%, but things are looking good. Of course, with AI and tech stocks leading the way, as the tech stocks usually lead the way in the bull market. So things are looking good. The S&P is finally out of a bear market. It's in a bull market since last Friday. QQQ obviously has been in a bull market for a while, and yeah, things are looking good. But again, in the short term, it's still overbought. So just be cautious what I'm saying, and we'll definitely update you on Thursday regarding the Fed's decision tomorrow on Wednesday. Thursday's update is going to be on Twitter, EddieLux_. So please follow me on Twitter, and yeah, I'll definitely update you as more information comes out. Thank you for watching this video. If you found it useful, helpful, and informative, please like this video, leave a comment below, and subscribe for updates. Appreciate your support. Thank you again, and have a great day.